This is Alan Bush with ADMIS with the Daily Financial Forecast for Tuesday, January 19th. In the stock index futures, we are seeing prices higher this morning. This primarily due to the Chinese GDP numbers that did come in somewhat as expected. At least there were no big negative surprises in their GDP report. GDP in the fourth quarter coming in at 6.8% growth. Also, we had for the year 2015 GDP up 6.9%. So even though these numbers were not great, they were not as bad as some analysts had anticipated. There was some talk that GDP in China could be as low as 6.5 or lower. So no major negatives viewed as supportive, and this helped stock index futures to advance in the overnight trade. Also, we did have bank earnings coming out better than expected. Also, we do believe that since the Chinese economy now in the last week or so is starting to look a little bit better, we had some big export numbers reported last week that the economic stimulus that China embarked on just a year ago is starting to bear fruit. So we are optimistic that the Chinese economy will do better than most analysts are anticipating, and that should be supportive to stock index futures. Now, moving over to the currencies, the dollar index advancing. We still feel that the dollar index will work higher at least through the first quarter of this year, which is in line with the bullish seasonal. Also, the Fed is the only major central bank that is likely to raise interest rates this year. Even the Bank of England, who has been hawkish to some degree, will probably not be able to raise until next year. So the dollar index supported by that, and we continue to believe that the dollar index will be gaining over the next 3 months. Seeing some pressure in the yen as flight to quality longs are being liquidated in light of higher stock indices and a more stable Chinese economy. And the euro currency under a little pressure after German investor confidence coming in a bit on the weak side. Now, moving over to the interest rate futures markets, did see some good gains late last week in a flight to quality bid when stock indices fell so hard late last week. However, futures are lower today as stock indices trading higher. Also, we now have the probability of a rate increase from the Fed at the March meeting falling now to 40%. If you recall, it was late last week that we were at the 47 to 48% of probability, and on January 6th, the probability of a rate increase at that meeting was at 55%. So this is in keeping with our belief that the Fed is likely to raise rates maybe only 2 times this year, while the consensus view among economists is 3 rate increases, and the Fed itself indicating in one of their recent reports that they thought that they could raise 4 times this year. So with that in mind, we are seeing the bonds in somewhat overbought territory. I think there's a lot of flight to quality longs that are likely to be liquidated, especially if stock index futures start to trade higher and recover from the lows that we have seen late last week. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
27.